Good morning. I wanted to try to use a few minutes of my drive this morning to share a few things about a couple of financial instruments that I believe that if you've got dollars to invest, you need to look at these financial instruments. You need to look at this company and what they're offering and why. The company is called Strategy. Formerly was called MicroStrategy. Ticker symbol is MSTR if you want to look it up on a financial stock website. The company Strategy is owned by a well-known Bitcoin advocate named Michael Saylor, and he started a little over 4 years ago purchasing Bitcoin with his company's cash. So putting Bitcoin as an asset on their balance sheet and converting a lot of their cash to that. Since then, not only did they convert several $100 million of their cash position into Bitcoin, but they have been using income that they are bringing in through issuing more shares, issuing new financial products, preferred shares, and issuing convertible debt notes into the bond market. They've been using those proceeds to raise money, raise funds, raise cash, and they've continued to invest that into Bitcoin, such that now they are considered a Bitcoin treasury company more so than a software company. And all of that may not be interesting to you at all, but what is interesting is that they are positioning themselves. If you believe Bitcoin is here to stay, or has a possibility of being here to stay, has a possibility of continuing to go up or trading sideways, or even just continuing to be relevant and going down some, MicroStrategy's positioned themselves already in a position where they're going to be a very important company in finance for years and decades to come, I believe. Well, one of the things that I'm wrestling with right now is I manage, help a few other people, family members and things, manage their money, is should I recommend? I've been hesitant to really recommend Bitcoin and recommend MSTR shares. I've recommended it to some in certain instances, buying some, and I buy a good bit of it myself, what most financial advisors would consider way overweight MicroStrategy or their common stock, their MSTR shares. But what I think everyone should consider as part of an income strategy to generate yield, to generate income, is investing in their preferred stock options. These are available at a retail level. Your broker can buy these for you. You can buy these on any online brokerage. If you do your own stock purchasing or investments, you can buy it. The ticker symbols, the first one is STRK, STRK. That's one that I'm personally buying on both our business's balance sheet to generate yield with our company's cash reserves. And then also there's another one called STRF, STRF, and generally the way that those are set up, STRK has a conversion. If Strategy were to go up from around $300 a share where it is today, it can convert at a price of $1,000 per share. So if it were to rise, if it were to triple or more in value, the common stock, you could convert those preferred shares of Strike to MSTR common stock. But that's not the main reason most people are looking at it. They're looking at it because it pays an 8% or $8 dividend per share at a price of $100 per share. Now, it's trading around $85 per share. So doing the math there, if you divide the $8 into the $85 price that you can get the preferred stock right now, that's paying a 9.5% yield. They can pay that a few different ways, and there's some, you would want to read some of the nuances with that, but that's going to be a quarterly cash dividend of 9.5%. And I'm honestly at this point converting I had money in ETFs that held a basket of high yielding corporate bonds. And so that fund, SPHY, it's kind of a junk bond fund that's paying a little over 7% yield. And it's going to have a lot of fluctuation. It's going to almost look like the stock market, but not quite as volatile. So in a big drawdown year in the stock market, let's say 20-30% drawdown, like we've seen as recently as 2022, and could be looking at this year potentially, those bonds are going to go down in value as well, and they can go down 10% or more. The ETF can. So all that to say, I'm converting some of that just because I'm actually concentrating my positions, because I believe that MicroStrategy has a better capital stack, has a better debt to equity ratio than any of these other no-name companies that are in my basket in that ETF that I'm not going to look into. So I have more confidence in strategy or MicroStrategy's ability to pay their obligations, ability to continue to pay me my $8 per share dividend per year than I do with the junk bond fund that I have. So I'm basically getting out of those junk bonds, putting some into essentially money market or real short dated bond funds that are paying closer to 4%. And then I'm putting some in there, and then I'm putting some of that money in strategy, which will keep my yield up over 7%, but is putting me in things that I believe is going to be less rocky, and that I believe is going to be, it's more concentrated, but because I've put in the hours and hours and hours of evaluating it and learning about it, I just feel more comfortable with it. I mean, when you think about, if you're you think about how much you rely on your own job for your, the vast majority of your income, you're pretty concentrated. If you own a business, you're extremely concentrated in your business. So concentration, is not of your capital, of your assets. It's not necessarily a bad thing, but you better understand what you're in if you're going to take a heavy position, meaning more than a few percent of your total investable assets. So yeah, I think that if you're looking to generate yield right now, I have people I'm talking to that have CDs coming due, and they're like, should I roll over and renew my CD at 4%? These short dated 1-2 year CDs or treasuries, and I'm like, I don't know that you should. I mean, that's pretty safe, and I do think that is outperforming. It's keeping up with the current inflation rate, but over the long pull, do you really want to be there? And when you start looking at what is that compounded at, and what if rates start to go down and you can't renew into that? I'm almost thinking that at least for a portion of people's fixed income investing, they should look at STRK. If you want even less, I think STRK is the better deal right now. STRF, I mentioned that one. That one pays a $10 per $100 strike price dividend, so a 10% at the strike price of $100. It's trading less than $100, and so the yield on it is around, at the current price, is around 11.5%. So you can get 9.5 or 11.5. With STRF, you have no conversion option, so it's going to trade even less, with less volatility, less up and down. It's going to be more stable, more flat, both to the downside and to the upside. So you're really taking away pretty much all upside when you invest in that one. You're just wanting that 11.5% dividend, which is a good dividend. But for me, I'd rather take the 9.5 and have the upside if Bitcoin does what a lot of Bitcoin advocates think it's going to do and continues to perform the way it has the last 15 years. If it does that for another 15 years, if it even does a third of that performance for the next 15 years, MicroStrategy stock is going to go up so much that you're going to want that conversion at $1,000. So Strike, I think, is a good option. I think that, if you're young and you believe in Bitcoin and you believe it's going to keep going up, you would buy MicroStrategy stock, because they are a company that is going to play an important role in the Bitcoin ecosystem and the financial world moving forward. They already own, to put it in perspective, they own 531,000 approximately Bitcoin out of a total finite supply of 21 million. So they already own somewhere around 2% of the total supply of Bitcoin. They own more than all known government holdings of Bitcoin combined across the world, not the United States. All government holdings of Bitcoin, Strategy, MSTR, owns more Bitcoin than all those governments. So, I'm a pharmacist. I have a day job. I own a business. I'm headed to work in a pharmacy all day today. But I do think that I also love following this stuff. I love learning about it. I do believe Bitcoin is a good thing, and I'm cheering for it to succeed and to continue to help to bolster and limit government's ability to inflate away people's hard-earned money. That's what I hope that it does in the long term. I hope that we return to some form of respecting sound money or hard money. Non-manipulatable, non-inflatable money. And so that's what I hope Bitcoin is. But you don't even have to believe that for Strike to be a good option for you. So look it up. Look up STRK, the preferred stock offering for MicroStrategy, and let me know what you think about it. It is paying a 9.5% yield. So the question is, can they keep paying that? Maybe you wouldn't buy a preferred stock or a bond of a company that you think is going to ultimately fail and not be able to meet its obligations. So you have to look and see, do you think they can meet their obligations? Okay, go look at Strategy as a company. Strategy as a company has issued a lot of, as I mentioned, a lot of these preferred shares, a lot of convertible debt. They've taken on a lot of zero coupon debt and issued that into the bond market. So they have debt on their balance sheet. But their debt combined with their preferred stock obligations is like something like 12% of their current market cap. Their debt is only 12% of their current market cap. Their debt, if you say, okay, but Strategy's way overvalued because they're valued at somewhere around 2 times their net asset value, meaning their Bitcoin. They're valued at more than their Bitcoin holdings, almost double what their Bitcoin holdings are in dollar terms. Why? Okay, say you don't believe that's right. Say that you think they're pretty much worth their Bitcoin. Their debt is only 22% of their net asset value. Bitcoin would literally have to collapse back down to lows not seen in over 5 or 6 years for them to even be close. And even then, these are staggered debt options, and it would have to sustainably stay that low for them to be in trouble and unable to meet their debt obligations and their preferred stock payments. So they have just so many options, and they are really a financial engineering company. They call themselves a Bitcoin strategy company, but they have brilliant financial engineers that are just running circles around the traditional finance world. They are taking advantage of a known fact that dollar supply has been growing for 40 years at a pretty steady rate when you look at it over the long term, about 8% a year. They know that dollars are being devalued, and they're trading those cheapening dollars and buying a hard, sound form of money, Bitcoin. It's at least interesting. And now there's a way for you not even to really feel that strongly that Bitcoin's going to go up. There's a way for you to buy in and generate almost a 10% yield with upside if things do go up. So with upside potential, with the convertibility of that STRK preferred stock. I think it's worth some of your time if you're interested in this kind of thing. I think it's worth putting a portion of your money over there so that it can work for you and pay you. There's a lot of different ways to invest, a lot of different ways to think about these things. But I think you have to look at MSTR Strategy as a company, and I think you have to look particularly at their preferred stock options as a retail investor, because it's really cool to have the option to purchase things like that yourself. So hope everyone has a great day.